Hello all and welcome back to Finominal UK for another product review. In today's review we're going to be focusing on the iShares UK Dividend UCITS ETF with ticker IUKD. Initially looking to the fund fact sheet, we can see it's quite a popular fund indeed with 1.15 billion of AUM. And to note on the total expense ratio, 0.4%, so slightly on the expensive side, I will say, for a passive fund, though not completely unreasonable, is what I will note. Looking to the fund overview, so this fund seeks to track the performance of an index composed of 50 stocks with leading dividend yields from UK listed companies, excluding investment trusts. So diversified exposure to UK companies to the higher yielding subset of the FTSE 350 index. So that's the methodology of this fund. So a direct investment into 50 UK companies with a single country exposure with a focus on income are the key benefits and methodology of this fund. So now we've got that initial overview, let's head over to the fund analyzer within Finominal for our fund analysis. I'm selecting the benchmark of the FTSE All Share index just so we can see how this fund compares against the UK market in general, which, as we can see, has seen considerably less total return, around 113 percentage points gap for the total return, and it has done this at higher fees as well, so 0.4% for IUKD versus 0.17% for the FTSE All Share index. To note on CAGR, 5.3% for IUKD, 7.1% for the FTSE All Share, and we can see increased volatility and max drawdown for IUKD versus the FTSE All Share index. So 18% volatility for IUKD versus 16.7% for the FTSE All Share index, and considerably higher max drawdown of minus 61.73% for IUKD and minus 46.19% for the FTSE All Share index. This can be attributed to the more concentrated number of holdings, of course, but still that is quite a chunky drawdown, is what I would say. Noting on Sharpe ratio, Sharpe of 0.2 for IUKD versus 0.32 for the FTSE All Share index. And now to note on dividend yield, so we can clearly see this is an income-paying fund, 4.53% dividend yield for IUKD versus 2.83% for the FTSE All Share index. Now this is where it gets quite interesting when we look back to total return, because the dividend yield is reinvested within this, so the total return accounts for this reinvestment already. But as this is an income producing fund, likely clients will want to take that income and not reinvest it. So in actuality, the total return for this fund is actually likely to be much less than 187.87% is what I would note initially. And if we look at performance benchmarking, we can see that underperformance of the UK dividend funds versus the FTSE All Share index. Let's move over now to asset classes and markets. So 100% in equities, as we would expect. The interesting to note, breakdown by market cap seems to be quite an even split, I would say. 39% large cap, 25% in mids, and 36% in small. So quite nicely diversified, I would say, against market cap. But let's move over now to sectors. So certainly seeing a sector bet in financials with 37.4% of this fund invested in financials. Other notable sectors being consumer staples and utilities. Also quite notable as well, having no investment in industrials versus the All Share index, and considerably less holding in healthcare as well. I think that's certainly worth noting, especially when we go back to the fact sheets where this says to have a diversified exposure to UK companies. Whilst we've seen that from a market cap perspective, maybe not as much from a sector perspective, as I think that's financials bet is worth noting, is what I would say. Let's look now to alpha and factor exposures. We're going to head over to return-based factor exposures. We're looking at this graph here, equity factor risk sources, mainly seeing the positive equity factor risk source of the value factor quite recent years, and we can see that further with a correlation of 0.3 to the value factor Also a beta of 0.2 to the size factor is worth noting. Let's move over now to risk, specifically drawdown and scenario analysis. So as we noted initially in the overview section, this fund has seen considerably deeper drawdowns than the FTSE All Share index. That is to be noted. Looking now to diversification, there's not really much to note on diversification because it's 100% in equities. So we could look at other funds, cheaper peers, that sort of thing, but regardless, the methodology would likely still be the same. If you sort the FTSE 350 by the highest yielding companies, you will likely still get IUKD, is what I would say. So how can we make this better effectively? How can we still see an income producing fund or portfolio, but still seeing better drawdown protection and saving on fees and such? Well, I've already thought on this, is what I would say, and I've created two portfolios. So this is now the asset comparer within Finominal, where I've created a UK specific portfolio using 60% the FTSE All Share index and 40% SLXX. Just to show you on the underlying holdings, so FTSE All Share and SLXX is iShares Core Pound Corporate Bond UCITS ETF. In regards to the other portfolio we'll also be comparing against, we're using the global portfolio, so 60% in MSCI World and 40% in iShares Euro High Yield Corporate Bond UCITS ETF. The reason why I wanted to show a UK specific and a global portfolio is because obviously the UK Dividend Fund is focused on the UK, but I do think it's worth looking at the global portfolio, as we can see, as it's considerably outperformed all of the other assets we are comparing. But if we look at that UK portfolio specifically, we have seen a much smoother line, specifically, or especially, should I say, around that max drawdown of the UK Dividend Fund is what I would note. So yeah. If we continue now, we can look at rolling returns. Like I said, the main thing I'm noticing here is just these two, just a simple portfolios, only two funds, have seen increased drawdown protection and higher returns for the global portfolio, though we have seen underperformance for the UK specific one. But if I head over to statistics, whilst we have seen a lesser total return for that UK portfolio we created at 136.52% versus IUKD at 179.76% for this time frame that we're currently looking at. If we look at dividend yields, we've actually got a slightly higher dividend yield at 4.82% versus the IUKD at 4.56%, and this has also been at a significantly less max drawdown at -25.74% versus IUKD at -44.66%. And we can look at Sharpe ratios, the data's all in front of us, 0.57 versus the Sharpe of 0.39 for IUKD. As mentioned, this is a slightly different time frame because of some of the funds we're invested in. We can also then look at the global portfolio, and again, the reason I wanted to show this as two options, if you've got clients who just only want to invest in the UK, might be a better alternative to look at in regards to drawdown protection while still having a high income yield, dividend yield, should I say. But versus the global portfolio, this beats all on every metric. So we can see a higher total return, 247.18%, higher CAGR, 9.28%. We've also seen higher Sharpe ratio, 0.81. Also the lowest max drawdown at -20.8%. And if we look to dividend yield, the highest dividend yield as well at 5.47%, should I say. And again, these are just created just from two simple funds, and also much more diversified as well. Obviously, iShares UK Dividends, 100% in equities is what I would note. So yeah, that brings me to the end of this product review. As always, I do hope that was helpful and informative. And if there are any other funds or portfolios you'd like me to analyse next, please do let me know in the comments. But other than that, please do like and subscribe, and we'll see you all in the next one. Thanks all.